Welcome students. Today's topic is working capital management. So in this topic, I am going to cover what is working capital, okay, what all those key components to, get the value of the working capital, and what is the purpose to have the working capital management. In the next, I'll cover importance and characteristics of working capital management, and at the last, working capital formula and types. All right. So to begin with, introduction to working capital. As far as definition is concerned, working capital management, it is the process of planning. Working capital management, it is the process of planning and controlling a company's current assets and current liabilities to ensure a smooth day-to-day operations. So here the key point is, it is the process of planning and controlling. Okay. Companies' current assets and current liabilities. Current assets and current liabilities to ensure a smooth day-to-day operations. Key components. What are all those key components? The key components: current assets and current liabilities. So under the current assets, it could be cash, inventory, accounts receivable. However, in the current liability section, it could be accounts payable and maybe short-term borrowings. Okay. And if you're talking about the purpose of the working capital management, so the purpose is to maintain liquidity and operational efficiency by balancing short-term assets and liabilities, because capital management or working capital management depends upon the current assets and current liabilities management. All right. So here the purpose is to maintain liquidity and operational efficiency by balancing short-term assets and liabilities. All right, moving to the next, importance and characteristics of working capital management. I have jotted down a couple of points for the importance. So first one is ensure a smooth business operations. Definitely, if we are having the proper working capital management, probably there won't be any issues in business operations, and or maybe very smooth business operations. It also helps pay short-term expense on time, definitely, right? Because talking about the working capital management, so it helps to pay, okay, short-term expenses on time. Another one is maintains business stability and growth opportunity, definitely. Ultimate objective is to maintain business stability and growth opportunities. Now talking about the characteristics, what is the characteristics of the working capital management? So this is, especially focuses on short-term assets and liability, that is current assets and current liabilities. Measures liquidity positions. What is the position of the liquidity? Next, balances risk and return. So if you're talking about balances risk and return, okay, it is nothing but short-term and long-term assets management. All right. Is dynamic and changes with business needs, definitely, because it is not the static one. It depends upon the changes in the current assets and current liabilities, and also the requirement of the business. Okay, so if there is a huge demand, or maybe demand has been increased, definitely the current assets and current liability will also increase or decrease. All right, now moving to the next, that working capital formula and types. So if you're talking about formula, working capital is equal to current assets minus current liabilities. All right. So types of working capital. So here I can see three types of working capital management mentioned. The first one is positive working capital. That means current assets greater than current liabilities. So we can say the company or firm is financially stable. Another one is zero working capital. That means current assets is equal to current liability. It is quite risky. It is quite risky. And negative working capital is assets lesser than current liability, or current liability is greater than assets. So it is a very, very weak positions. Okay, so ultimately the best suitable situation is current assets greater than current liability. For an example, current assets is 2 lakhs, current liability is 1,20,000. So working capital is equal to 2 lakhs minus 120 is equal to 80,000, right? So that is nothing but the positive working capital, all right? Because here I can see current liability is current assets is greater than current liability, all right? So that's it for today's topic. I hope you understood it. Keep practicing at your side. Do let me know if you have any questions. Please visit my urban profile. Thank you.